In an earnings season full of companies that have reported great quarters and seen their stocks fall, you don't have to imagine what happens to companies with suboptimal quarters. Consider the case of Clorox, one of the biggest and most obvious winners from the pandemic. For the last 9 months, the stock's been selling off in anticipation of tough comparisons in a post-COVID world. Sure enough, when Clorox reported this morning, they delivered a mixed quarter. Top line missed, bottom line beat, but then management adjusted down their full-year earnings forecast. Still, the stock only dropped less than 2% today, to the point where it's roughly $5 away from its 52-week low. So has Clorox finally been de-risked here, or do we need to be wary now that the company's dealing with both tough comparisons and, maybe even more important, rising costs? Let's check in with Linda Rendell. She's the president and CEO of Clorox to get a better read on the quarter and where her company is headed. Ms. Rendell, welcome back to Mad Money.
Great to be here, Jim. Thanks for having me back.
Okay, so Linda, I'm so glad you're here because Clorox has long been one of my favorite companies ever since we started the show 16 years ago. And I feel that some people think it's an existential issue. They used a lot of Clorox last year. Maybe they don't have to this year. I found that what was disconcerting is something that's well beyond your control, which is just these runaway inflationary costs that are affecting so many consumer packaged companies, including yours. What do you do when your raw costs go up and you don't want to hurt your consumers?
Yeah, I think, Jim, the good news is we're starting from a very strong base. We delivered flat sales on top of double-digit growth in the same period a year ago. And we are seeing the trends consistent with the increased expectations we have on our business from a sales growth perspective continue to persist. So we're starting from a really strong place with strong brands. But we do need to address the cost environment that we're experiencing. And we're seeing costs across many inputs rise, and we'll need to do that with a holistic solution. Of course, we'll activate our long-standing cost savings program and ensure that we're delivering that across our businesses. We're looking at price increases, although we're being very measured and taking that in a category-by-category approach. And of course, we'll focus on innovation and margin-accretive innovation.
Okay, when I was reading through the quarter, I felt, okay, well, listen, let's say Jay Powell, an analyst, when he asked you, hi, this is the Federal Reserve Chairman, how many of these actual increases are temporary, how many are going to roll back, and how many are a fact of life that we're going to have to live with?
I think it's yet to be seen exactly how it's going to all shake out, Jim. But we are seeing an inflationary environment that we expect to persist well beyond a quarter. We're certainly seeing that in resin pricing and other input costs, as well as a tightening transportation market. And we expect those to be here over the midterm. But what we do see is some temporary costs that we've had as a result of COVID, and we can remove those costs over the coming months as we get back to a place where we return to work in a more normal way, where people are vaccinated, and that will help us get rid of some of those temporary costs that we've experienced over the last 12 months.
All right, let's go over learned behavior once vaccinated. I'm vaccinated. I hope you're vaccinated. Look, we always want, there's 100 million people who are vaccinated. How many Clorox products do they have? And I'm holding up one of mine. I don't go anywhere now with the disinfecting wipes. I flew to Mexico. I had them. I flew to Florida. I had them. How many people are doing what I'm doing, even after we're vaccinated?
A lot. And I am vaccinated as well. I'm so pleased to be. I just got my second shot and hope many more around the country will choose to do that. What we're seeing is lasting behaviors in cleaning and disinfecting. People want to have control over their environment, and they want to remove the germs that cause illness. And our products do that so well. So we're seeing much of the same behavior that you're exhibiting, Jim, with other people. They want wipes, and they want them on the go so that they can keep themselves safe. If they're at home, or if they're in a plane, they're traveling, getting back to normal life, returning to work. So we expect that to persist. And we've certainly seen that as people have begun to get vaccinated here in our third quarter.
Now, I know that health and wellness a little bit challenged. Bags not. I thought that was terrific. Grilling, obviously not. But I did want to ask you, and I know it's not to be unexpected because it's been the focus of mine for some time. I've always felt that your predecessor, who I had great fondness for, went into a market that I am a huge user of. Probiotics. I use a lot of I'm holding up right now the Mood and Stress for New Life. I am a big user of your products, but I also know that it's a cutthroat business. And this morning, Nestle's came in, made a big acquisition of a company that a lot of us use. And I know you took a write-down. You did about $1 billion worth of buying in this category. What is the future of this category? Because it's only 4% of your company. And I think at a certain point, Rainbow Light, this one, maybe it's not worth holding on to.
Performance were below expectations from our assumptions at the acquisition, and that's the reason for the write-down. But the business remains a strategic fit for us. We're a health and wellness company at heart. Vitamins, minerals, and supplements play such a key role for people to take care of themselves. And we're seeing that accelerate in the pandemic. So we feel great about the space that we chose. It's just going to take us a little longer to get there. We bought some small brands in fragmented categories, and we just need longer to get them to the place that we know they can deliver. But we have confidence that we have the right places to play from a tailwinds perspective, and we're confident that we can get these to a place where they're growth and profit accretive for the company over time.
But is that a good use of your time versus some other categories that you have that are so extraordinary that you can do so much more with?
You know, Jim, we have always long played in a lot of categories, and that's what we do really well. We apply capabilities to a lot of businesses that meet similar criteria, where they're big share brands and mid-sized categories. And VMS plays really well into that portfolio, and it's appropriately staffed. But it's also important to note all of our other opportunities are also appropriately staffed, and we feel great that we have the right people and the right resources and talent against all of the areas of growth for our company.
You didn't break out as much as I would have liked. One of my favorite brands was this Burts Bees. How is Burts Bees doing right now? Expensive product, but one that I think that millennials really love.
Yeah, Burts Bees, I'd say from a brand perspective, continues to do extremely well. The brand has incredible power with the demographic who's looking for a natural alternative in their beauty and health routines. So we continue to say great love for the Burts brand. It has been challenged given COVID shopping behaviors, and people are using less makeup, which has impacted parts of our portfolio. The good news is for our lip balm business, we've taken the #1 share position in the category, and we expanded that lead during the pandemic. So the fundamentals are good. And as we see people return to shopping in store, and returning to more normal skincare and makeup routines, we expect Burt's Bees to bounce back strongly.
Okay, but that's where I'm going, because I think once we've taken off our masks, we're going to refocus on the areas that we forgot about. A lot of the younger people really want natural. If they can't get natural, they're not interested. Burt's Bees natural, I suspect that they could have a nice spurt once we stop wearing masks.
I think that's exactly right. Mask behavior has changed a lot for all of us. But I think people are looking forward to getting back where they can do some of the things without a mask, including skincare, wearing some lipstick for women out there who enjoy that. And we'd expect Burt's continue to have that strong performance that we experienced prior to the pandemic as soon as we get out of them. So
to me, it
hopefully,
seems
again, people go get vaccinated.
But to me, it seems you put through those price increases that your brands are strong enough to be able to sustain that. And the stock is going to take care of itself, having already gone down, anticipating nothing positive, and you're going to deliver positives. That's why I think the stock's right here.
Yeah, I think, Jim, that's exactly right. The long-term health of this business, we continue to have incredible conviction in. We raised our sales growth targets back in February to deliver 3 to 5% growth over the long term, and we continue to feel terrific about that. We have category tailwinds, we have very strong brands, and lots of opportunities to continue to do that. So, we're focused on the long term. We're going to manage through this tough cost environment. But we're confident in our ability to accelerate long-term profitable growth.
That is excellent. That's what we needed to hear for those of us who obviously were concerned that past pandemic behavior will not be future pandemic behavior. Thank you so much to Linda Rendle, CEO of the Clorox Company. Thank you for coming on Mad Money.
Thanks so much, Jim.
Look, guys, the stock goes down in anticipation. So when finally the news happens and it doesn't go down much, that's more of a buy than a sell.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.